Well, actually, the current account deficit has come out much lower than what the street was expecting. The street was expecting that the current account deficit will be $30 billion at least, maybe 30 to 31 billion. It has come in at just 23.9 billion or 24 billion, a good 6 billion short. And that 6 billion is short because the services exports are 6 billion higher than the earlier data given by the PIB and the RBI. The PIB gave us to understand on July 14th press release that the April-June net services exports is 25.6 billion. But in the BOP data that was released, that has been released by the Reserve Bank today, the services net exports come in at 31, exactly 5.5 billion more than what was earlier mentioned to us. And as a result, the current account deficit is a pleasant surprise. It is not a deficit of 31 billion. It's a deficit of 23.9 or actually 24 billion, almost. The balance of payments deficit is also a derived number. There is an item called banking capital, which one can never guess. There's something the Reserve Bank tells us, and that's coming at a huge 19 billion. So the balance of payments deficit, which was expected to come in at about 20 billion, has come in at just $4.6 billion. Now, actually, RBI intervention at that time was very high. So again, this 4.6 is a bit of a puzzle. But more than the balance of payments, it's the current account deficit, which has come in way lower than expected, and the market will hopefully, react positively to it. We are being joined by Upasna Bhardwaj, the Chief Economist of Kotak Mahindra Bank. Upasna, what have you made of the number? Is it a pleasant surprise for you as well?
Latha, it's definitely a pleasant surprise. We were expecting a 3.7% as the current account deficit number. And clearly, as you mentioned, I think the surprise is on the services segment. I don't think we've seen this kind of a discrepancy between the monthly releases versus the quarterly BOP numbers really in the recent past that I can recall. That is exactly where the biggest surprise has come. I think marginally, yes, there are transfers which are slightly higher than what I was expecting. But overall, the bigger surprise is clearly on the services segment, on the current account deficit side.
Fair enough. What Upasna is referring to is what you call private transfers. This is Indians living abroad and sending money to their families. That has come in at 25.6 billion, almost 27 billion. That's, year ago, that's a 22% increase over the year ago levels. Year ago, it was more like 22 billion thereabouts. It's a substantial increase, which is, again, very positive in terms of the current account surplus. Now, Upasna, would you want to revise your full year? For the full year, everyone was sitting at 3.5 billion. Do we have to extrapolate this extra 5 billion into all the quarters? What are you likely to do?
Latha, I think there are two aspects to keep in mind here. One is that the second quarter was expected to be significantly higher in terms of CAD compared to the first quarter. And I still believe that will be the case because we already have, the trade deficit numbers for July and August, and that is already the run rate is pretty high. And so I do expect that the current account deficit for the second quarter could be a little north of 5% of GDP. That is there. For services, we will have to wait and watch. Is there any inherent change in the trend? But my sense is this could be a one-off, and we will not really continue to see this kind of a 30 billion plus number on a quarterly basis. So that's where another point is for transfers as well. From the second quarter onwards, we have seen the crude oil prices and all correct. So there is again a possibility that the transfers also moderate a little. So overall, I think the current account deficit could still be a little north of 5%. Overall, again, the capital account for Q1, which is largely because of capital account surplus that we're looking at, is because of banking capital, as you referred to. Somewhere, the excessive amount of forward book outstanding, which was run down by almost $35 billion. So in some form, it may be a reflection of that, wherein the flows had to come from somewhere to deliver to RBI. And that probably is there, which is not going to be the case in the subsequent quarters. So overall, yes, obviously because of adjustment, because of the first quarter, the numbers will be revised. for us as well. But the trend going ahead doesn't necessarily change. The external sector headwinds still remain.
Okay. Just a final question. Do you expect the rupee to react positively tomorrow? Or will it be overwhelmed by the global risk off?
Global parameters will be much more dominant going ahead, I think. But yes, briefly, to begin with, if you're talking about just tomorrow, this is a positive for sure because expectations are building up around not a very good looking number. And this will provide some respite to the market. So briefly, yes.
Yes, all right. Of course, after that, we will all be captive to the Reserve Bank's monetary policy as well, and the ebbs and falls in the dollar index and other currencies. Upasna Bhardwaj, thank you very much indeed for joining us. So that's the sum and substance. It's a positive surprise. Economists will worry why is the monthly data not matching with the quarterly data put out by the Reserve Bank, but this is the final data. Final data is that the current account deficit is less than 3%. 2.8 is very much within the Reserve Bank's comfort zone, and there therefore could be a positive reaction on the currency.